The lower oil prices translate into cheaper gas prices, and that is beneficial to U.S. drivers and consumers and several countries that import oil, like China. But on the flip side, oil-producing countries are feeling the pain. Malaysia says the cheaper oil is cutting into the revenue that the government gets from oil exports. Rian Maelzer reports.
Royalties from the state oil company Petronas provided 1/3 of the Malaysian government's revenue last year. That's bad news now, because plunging global oil prices will hit the government's income and hamper its spending.
Definitely, I think it's going to be a challenge, but I think one of the key things that you'll see government starting to do is prioritizing some of the major projects. So maybe even stalling some of the projects to future periods.
Malaysia has also seen the price of another key commodity, palm oil, slide by around 20% this year, hurting hundreds of thousands of small-scale farmers and dampening the rural economy.
It's been difficult. When the price of palm oil goes down, then other prices should go down too. But earlier, when the price of palm oil was higher, prices of fertilizer and pesticides all went up a lot. Now oil prices have fallen, but still these things never get any cheaper.
Economists say the drop in crude oil prices should eventually result in lower transportation and other costs, and also help to moderate inflation when the government introduces a new goods and services tax in April. Also on the plus side, the government has finally been able to end its heavy subsidies on petrol without inflicting pain on consumers, potentially saving itself billions of dollars a year. Exporters too should benefit from a weaker ringgit, and economists say the commodities price slump should help spur needed changes.
The decrease in oil prices is going to force the Malaysian economy to start looking at new directions, particularly with respect to shifting gears to becoming more knowledge intensive, diversifying the economy and looking at key drivers such as tourism, finance and other sectors that will drive the economy. So less reliant on hydrocarbon.
But economists now predict Malaysia's economy will grow less than previously expected in 2015, suggesting that in the medium term at least, Malaysia is going to pay a price for the oil slump. Rian Maelzer, CCTV, Kuala Lumpur.